Hello, everyone. My name is Nolan, and today we are going to talk about margin versus markup. Now, these are very confusing terms, and people oftentimes mix them up. So it's important to maybe dive deeper, look at some definitions, maybe look at an example or two, and so we fully understand what they mean and what they represent. Let's start with margin. Now, margin is just the measure of your business's profitability. It's represented by a percentage, and what we are doing is we are just analyzing the profit as it compares to revenue. Now, on our income statement, we have different types of profit. We have our gross profit, which is just revenue less COGS. We have our operating profit, which is gross profit less operating expenses. And then we have our bottom line net income, which is just operating profit plus any other income less any other expenses. Now, as a bonus, we also have our contribution margin. Now, this is an important metric for investors, so it's important to understand what it represents. Contribution margin is just our total revenue less our variable costs. Now, when we talk about margin, we are looking at these terms divided by our total revenue. So gross margin is our gross profit divided by our total revenue. Operating margin is our operating profit divided by our total revenue. Profit margin is our net income divided by total revenue. I hope you guys are understanding the pattern here. Contribution margin ratio is just our contribution margin divided by our total revenue. So let's look at an example here. This company XYZ, here's an example of company XYZ's income statement. And you can see that we have calculated our gross margin, operating margin, and profit margin. So as you can see, our gross margin of 34% is simply just the gross profit divided by total income. Our operating margin of 8% is just our net operating income divided by our total revenue. And our profit margin is just the net income divided by our total revenue. Very simple stuff. I think another important metric to analyze here is our margin per revenue line. So in this case, we have three revenue lines: food, beverage, and merch. And what we are doing here is calculating the margin for each line item. So for food, we have COGS of 80 and revenue of 100,000, which leaves us with a margin of 20%. Beverage 50%, and merchandise 80%. Now switching to markup. Markup is how much extra we are charging for a specific item as compared to COGS. It can be represented as a dollar amount or a percentage. Now, unlike margin, markup, we are looking at the selling price and the purchase price. In a retail environment, purchase price is what we're going to use. If we're in a manufacturing environment, we need to understand what our item cost is, or item direct cost. And the direct cost is the cost of our materials, labor, manufacturing, any sort of cost is attributable to producing one extra item. Now, as a calculation, markup is simply our selling price less our item cost. As a percentage, it's just the profit, which is the markup, divided by our COGS. So let's take a look at an example. In this example, we are looking at the same company, XYZ, same revenue and same COGS line. To calculate markup, we are first going to calculate how much extra we are charging for each line item. For food, our cost is 80,000 and our revenue is 100,000. So our markup is 20,000. You can calculate that by subtracting our cost from our revenue. To calculate the markup percentage, what we're going to do is take that 20,000 and divide it by our COGS, our total cost, and that's how we get that 25%. So I hope these examples really illustrates the difference between our margin versus markup. Again, margin is the measure of our profit as it relates to revenue, and markup is the measure of our profit as it relates to COGS. Again, my name is Nolan. Thank you.